Okay, so when we're issuing that opinion, we called out standards that were followed when we did the audit. Let's understand what the sources of those standards are. And so we start to take a look, and before we get to some of the standards, it's worthwhile to know what different types of auditors are. So you can see that I've kind of went over this a little bit, but you have your external auditors. The external auditors are external from the company. They are the independent auditors. They are the ones that are going to be issuing those opinions on the financial statement. So it's the independent auditors report there. Okay. Now, we could have internal auditors. Internal auditors are not considered independent of the company. They report directly to the board of directors of the entity, however. So what happens? They could be reporting, and often do report, on the internal controls that are in place to make sure that the financial reports are fairly stated. Even though the external auditor reports on those financial statements, they rely on those internal controls to help make sure those financial statements are fairly stated. And an independent auditor is going to be part of the monitoring system internally inside the company that will help ensure that those financial reports are fairly stated. They report to the board of directors. So if the board of directors looks and sees an internal audit report saying, hey, there are some problems with the internal controls, then the board of directors can take action to see that those deficiencies are improved. If those deficiencies are improved, that means that our financial reports are going to be more reliable. That's going to facilitate then what the external auditors do when they come in and take a look at those financial reports. So internal auditors are not independent. They are the employee of the company, even though they report directly to the board of directors. Okay, so you have external auditors, you have internal auditors. External auditors are considered third party. Internal auditors are not third party. They're inside the company. Okay, government auditors, different types of government auditors. GAO, the agency I work for, Government Accountability Office, auditing arm of Congress. They are a federal government auditing agency. You have a similar agency in the state of California, state level, state controller's office. These audits tend to look at compliance, tend to look at programs, that sort of thing. IRS, as you probably know, has auditors. Now, what are they doing? They're looking at tax returns of companies and individuals, businesses and individuals, to see that they have properly reported the tax liability so that the federal government makes sure that it's collecting the appropriate tax. At the state level, we have the state franchise tax board. Again, more compliance with laws, compliance with tax laws, compliance with whatever the regulations are, more than financial statement auditing. Although, again, in the case of the GAO, we audited the consolidated. I say we, I haven't been there for about 6 years, but it just will always be part of the we for me. The GAO audited the consolidated financial statements of the federal government, or they tried to audit, they disclaimed an opinion, but we also audited public debt, et cetera. Guys, when I say we, again, we'll make sure I'm being very clear. I do not work there anymore, but I'll probably always say we when I talk about the GAO. Inspector generals, I didn't write it here on the slide, but you've been hearing about in the news. Inspector generals are government auditors. So what happens? Each department in the federal government has an inspector general. And the inspector general's job to look to see that the department's activities are in compliance with laws, et cetera. And they look, and sometimes they see, hey, there's not compliance with laws, and they're looking to make corrections so that various activities are done in compliance with the law. So one of the ones that there was some concern about was the inspector general over the State Department recently got fired by the Trump administration under the not under the advisement of the Secretary of State, gentleman by the name of Pompeo. So they were looking and saying, hey, that's a problem with the independence, because that inspector general is supposed to be looking at that department. And now the Secretary of State went and said, hey, President, you should remove that individual. Meanwhile, that individual was looking at some activity of the State Department. So there was some concern there. Are we actually destroying the independence of internal auditors, inspector generals, by doing that? So that might be something that I might ask you to take a look at. And I'm going to be providing some guidance on the paper here at some point. It might involve considering some of the issues that you're hearing in the news about the inspector generals right now. Okay, forensic auditors. Forensic auditors tend to, they often say if you want to figure out where the crime was, follow the money. Okay, so forensic auditors, the FBI, okay, in fact, sometimes I encourage students that if you are somebody that's interested in law enforcement, there's two skills they look for. They look for language skills and they look for accounting skills, because you follow the money. That's often where the crime is. Okay, so when we tend to think of forensic, we start to think about criminal activity, that sort of thing, and looking to see where some of the criminal activity may lie, and follow the money trail. You can sometimes find the criminal activity, but it doesn't have to be criminal. Let's say somebody dies and they die without any sort of will, anything like that, saying where the estate is to go. A forensic auditor could be called in to investigate and talk about what is the appropriate distribution of, say, the assets in the estate, et cetera. So it doesn't have to be criminal activity, but forensic auditors are sort of untangling and getting to the bottom of various issues related to financial reports. So, okay. Any question about those different things? Okay. Think about some of those different options. That's the good thing about an accounting degree. You can go in any direction with this. Some of you may say, well, John, I'm a tax person, so I'm not going to be an auditor. Well, not necessarily, because obviously if you combine tax knowledge with auditing knowledge, IRS might be a way to go. So if you're looking at the tax concentration, that might not, that IRS. And if you look at the different entities that hire Golden Gate, I've seen that slide a number of times where they have these little bubbles bursting off as to how many former GGU students go to work for different entities. IRS is usually a pretty good bubble up there. Okay, different levels within an auditing. Partner is responsible for the ultimate proper execution of that audit. Okay, so they are sort of sitting there at the top, and they are required to make sure that the team is aware of their responsibilities, and they disseminate that through their managers, their senior managers. Okay, so senior managers are not necessarily involved in the day-to-day work as much as they are involved in reviewing the work of others, reviewing work papers, etc. Then you tend to have a senior, and this is where your supervisory activity begins. Okay, so you supervise and review the work of associates, and there's a question and a quiz. Oops, wrong computer, John. That one's not the main screen. There are a question in our quiz. Question 8 that we'll talk about where supervision begins, and that generally starts at the senior level. Sometimes you're called the auditor in charge, senior in charge, and you're really responsible for the day-to-day execution of that audit. Associate staff is where most of you would start. You work for a CPA firm. You're going to be more involved in the day-to-day task, and sometimes they have you doing stuff that's probably not as challenging, but they want to see how you're progressing through before they move you up and actually start to have you supervise others. So your supervision of others really starts at the senior in charge level. Okay. At the end of the day, partner is responsible for all the key decisions on the audit. And these are changing on me. I think it's because I have this set. I think I need to give it some direction, which is not to play narrations. Okay, and that'll stop that. And let's just go back to that previous slide. Okay, so as we're looking partner, is the one that is ultimately responsible for carrying out the audit. Now, the reason I've started that off and circled that, I know it's going to be a while before your partner, okay? But when we look at a lot of the guidance that we're going to be understanding, the standards that we're going to be understanding, okay, this is very important. These standards are directed to the partner. The standards, et cetera, are speaking to the partner, okay? So sometimes I have students that say, well, I don't know, I wouldn't be in a position to make that decision because I'm an associate, I'm a staff. But when we're understanding the material, we're understanding it from the perspective of a partner. Now, of course, no one's going to send you out in the first engagement and say, okay, make all these key decisions in an actual practicing case. You know, they're not going to turn you loose to perform surgery the first day that you become a doctor. You know, you're going to develop that over time, that where you're sort of, you know, the one that's running the surgery, et cetera. But when you study medicine, you're not understanding it from the standpoint of someone who doesn't know anything. You're understanding from what you're supposed to know. And then we finally get to a point where we'll trust you to make the key decisions, et cetera, associated with that. Well, it works the same way in an audit. We're going to expect you to know what the partner is supposed to be considering and thinking about. We're not going to turn you loose in making those decisions tomorrow, but you should understand what the standards are requiring of that. And of course, through experience, you work your way up to where now you're trusted to be the one making those decisions in a live case, an actual engagement with a audit client. Okay, good. So let's take a look at some key government regulation, okay? And the one that I'm sure you've heard about quite a bit is Sarbanes-Oxley. Sometimes students think that Sarbanes-Oxley is some sort of weird phrase or something. These are actually names of Congress members, okay? Sarbanes was a senator. He's a Democrat, I believe. Oxley was a House member. And he was a Republican, okay? So they got together after some major scandals like Enron, WorldCom, these sorts of things that you maybe have read about some of your other classes, and they passed the Sarbanes-Oxley Act. And what they did, the key legislation, part of the legislation that there's two key parts that we're going to want to understand here. One is they created the Public Company Accounting Oversight Board, PCAOB. And this Public Company Accounting Oversight Board has two key responsibilities. The major one for us is they set the auditing standards when you audit a public company. So remember, we looked at those two different opinions and they were slightly different if you're a public company or a non-public company. PCAOB is the one that tells public companies, hey, you have to put that opinion first. Okay, we're going to see that another key thing that PCAOB does or requires when they issue standards that are different from what we would see with a non-public company is they require, okay, sorry guys, I don't know why that keeps changing on me because I told it not to play narrations. Oh, I see, use timing. Okay, I think it was, I just had it checked up to show timing. Okay, let's try that again. Okay, so you come over back, okay, to what I was talking about here. So PCAOB, two major things, they issue standards. The standards we saw require a different opinion. The standards for public companies also require that the auditor give an opinion on internal control. That's that chapter 7 that we're going to put towards the end when we talk about the audit reports, okay? The other thing that PCAOB does is they actually look at the quality control system of entities that are auditing public companies. So if you audit more than 100 public companies every single year, PCAOB investigators are going to come into your CPA firm and they're going to sample your audits to see if your audits follow standards and to see if you have a good quality control system. The reason Sarbanes-Oxley required this of the PCAOB is one of the big accounting firms at that time, a firm named Arthur Andersen, was basically not doing a good job in how they were auditing, in that case, Enron. And so they basically went under as a result of that. That's why when we talk about the big four, we don't talk about Arthur Andersen anymore. We talk about PwC, KPMG, we talk about Deloitte, we talk about EY, Thank God I didn't forget one of them, because they'll come over to my house and beat me up if I forget to mention them as one of the big four. And so you have those firms. Arthur Andersen was one of those big firms, but they went under because of some things they were doing wrong with the Enron audit. And the Enron audit was a big reason for Sarbanes-Oxley. So Sarbanes-Oxley said, we're going to create the PCAOB. PCAOB is going to have the responsibility for issuing standards, and those standards will be different than what we see for non-public companies. In key areas is the structure of the reports, including the report on internal control. And then the other area is reviewing the work of CPA firms to make sure that CPA firms are doing a good job. Okay. And then another important legislation was the Dodd-Frank Act, and that led to some major reforms in Wall Street. Created the Consumer Protection Agency. That's the entity that Elizabeth Warren was the head of, or she never became the head of it. They blocked her from becoming the head of it. So that's when she started running for Congress and then ultimately for president there. But these sort of reforms came out of the financial crisis that came in 2008. By 2010, they passed some of this legislation. Let's see where we go from here. I mean, these are like major explosions on the horizon that now seem, at the time, that now seem not quite as major than what we're seeing now with some of the fallout from the COVID-19. So stay tuned for more sorts of legislation that probably will be coming through in this area, not in this area necessarily, but in response to what's happened with the virus stuff. Okay, but two major ones we should be aware of. The most important thing on this slide, PCAOB, Public Company Accounting Oversight Board. Okay, now as we've said, reasonable assurance is what we're able to provide. So the standards are geared towards allowing us to provide reasonable assurance, not absolute assurance. Okay, you can never provide absolute assurance. It is reasonable assurance. We talked about that a little bit in some of the chapter 1. Okay, now the entity that has governance over the operation of a corporation is called the board of directors. Sometimes you'll see the phrase those charged with governance. Okay, those charged with governance is a broader term because not every entity is overseen by a board of directors. For example, if you are auditing a public housing authority, then you have a board of commissioners, but they would be responsible for the overall operation of that entity. So those charged with governance is a more broad term that we often talk about board of directors. Okay, now on the board of directors, you have various committees that oversee various activities. The audit committee is responsible for the oversight of the audit. So they hire the auditors, they oversee the auditor, they fire the auditors if necessary. The audit committee is typically the entity that oversees the audit. Now, sometimes you'll have an entity that's small enough in which they may not have a committee structure, but still this audit committee function should somehow be exercised by those that have financial knowledge on the board of directors, even if there's not a formal audit committee. But the members of the audit committee or those exercising that function should be financially literate. Okay, organizations, and you have the Security Exchange Commission. Security Exchange Commission basically has if you look at the legislation 33, 34 legislation, 1933, 1934, I have to be careful to point out the century because we're getting close to the 100-year mark when the Security Exchange Commission was created. They basically were responsible for issuing the standards for preparing financial reports. They delegated that to the Financial Accounting Standards Board, okay? And the Financial Accounting Standards Board gets the authority to set accounting standards because the SEC, as the legislative authority, delegates that to the FASB. Okay, much of what you study in the financial part of the CPA exam would be in the issuance of standards from the FASB. Okay, Now, you also have the Public Company Accounting Oversight Board, and the Public Company Accounting Oversight Board really gets its authority from the Sarbanes-Oxley Act, but Sarbanes-Oxley Act basically pointed to the SEC as the entity that now is responsible for overseeing the PCAOB. This is kind of interesting because before you had the PCAOB, it was simply the American Institute of Certified Public Accountants that issued standards for both public and non-public companies. Sarbanes-Oxley comes around, creates the PCAOB. Well, let me back up. When I was on an engagement where Congress asked us to look at the auditing standard setting process in the United States, and so we looked at both accounting and auditing standards. And at that time, the American Institute of Certified Public Accountants, frankly, was being a little arrogant, and that they were saying, well, we don't get our authority from SEC. If you look at the 1933-34 legislation, it says nothing about setting auditing standards. It talks about setting accounting standards. So we, AICPA, are independent of the SEC, and so we can sort of set the standards the way we see fit, and we are the entity that sets the auditing standards. So you have some of these problems with the CPA firms and whatnot. Sarbanes-Oxley comes down around, says we're going to create an entity that's going to oversee the audit of public companies, the Public Company Accounting Oversight Board, and that PCAOB is going to issue standards when we audit a public company, and they are going to receive that authority from the Securities Exchange Commission. In effect, telling the AICPA there, take that. If you didn't understand it before under the 33-34 Security Act, Sarbanes-Oxley Act is going to clarify that for you. The entity that sets the accounting standards for, auditing standards for public companies is the PCAOB, and they get that authority from the Securities Exchange Commission. So why do we even have the AICPA anymore? Well, the AICPA maintains its responsibility to set accounting standards when you're auditing a non-public company, which is why we saw those two different opinions. Here's what the opinion looks like for a non-public company. Here's what the opinion looks like for a public company. Now, imagine for years and years, 100 years, let's say, you have the AICPA sitting there issuing the auditing standards for both public and non-public companies. Sarbanes-Oxley comes around 2002, okay, 100 years later, and all of a sudden now we're saying, well, the PCAOB is going to issue the standards for auditing public companies. Well, that would be a monumental task to ask the PCAOB to overnight come up with all the standards that would be required to audit public companies. So what the PCAOB said is, okay, what we're going to do is when you audit a public company, follow the AICPA standards. As we develop additional standards of things that you will need to do if you're auditing a public company. So what happens, and what we're going to look at in the next couple of slides, is when you audit a public company, the bulk of what you do is following what the AICPA says should be done for non-public companies. And then the PCAOB comes along and adds some things on top of that. For example, notice the opinions were very similar, but the structure of the opinion is a little bit different. When you're auditing a public company, you have to provide an opinion on internal control. If you're auditing a non-public company, although we look at internal control, we don't have to give an opinion on internal control. We simply will look at the internal control, and that will support just the opinion on the financial statements. So we don't just throw away, everything that AICPA says about non-public companies when we audit a public company. In fact, most of what we do is what we would do for a non-public company. And then we add on top of that some things that are required specifically for public companies. And the PCAOB is the one that comes out with those standards for those additional things. Question on that, because I know that gets a little bit twisted when we look at that.
I have a question, Professor. So all these organizations like FASB, AICPA, PACOB, who funds them? How they getting the funding to run the day-to-day operation?
Well, that's a good question. SEC gets money through appropriation, so they're a federal agency, so Congress appropriates money for them. The FASB gets funding from an entity called the Financial Accounting Foundation. And what happens is, as a public company, you have to pay to play. So if you want to be a public company, then you have to pony up so much money as a public company that then goes towards funding the FASB. Now that's somewhat of an improvement because, and that was under Sarbanes-Oxley. Prior to Sarbanes-Oxley, it was up to companies to basically give money to the Financial Accounting Foundation as they saw fit. Well, you can see there's a problem there. If I'm a huge company and I don't like something that the FASB is doing, I can simply say, hey, Financial Accounting Foundation, I'm not going to fund as much because I'm not happy with what the FASB is doing anyway. So Sarbanes-Oxley came in 2002 and said, no, you want to be a public company? Yes, I do. Then you're going to have to provide funding that funds the FASB, and you're going to have to provide funding that is used to fund the Public Company Accounting Oversight Board. The AICPA gets its money from who? From CPAs, the American Institute of Certified Public Accountants. So if I'm a member of the AICPA, I pay my dues, and my dues then goes to fund the AICPA. Now, where do CPAs get their money? CPAs get their money from their clients. So there's a little bit of a problem there in that if I don't like some of the auditing standards that are being required by the AICPA, I could squeeze them financially, right? And say, well, I'm not going to be a member. I'm not going to fund as much. So that's why they created the structure where the Public Company Accounting Oversight Board, by legislation, gets its funding from public companies. Same thing with the FASB. So when we get into the public setting over here, Sarbanes-Oxley has created a funding mechanism that is much more regulated than when we're down here with the AICPA, which is a much more voluntary sort of funding that comes into the AICPA. It's private, it's not a government, structured, regulated funding structure.
Thank you.
That's a good question. You also have the International Auditing Standards Board. What we're going to see is a few years back, the AICPA took on a project to have it more in line with the international standards. So there's not a whole lot of difference between what we do in the United States and what the rest of the world does. So sorry guys, I want to draw on that screen. It's not one that I can draw on. I can draw on it, but it doesn't show up on your screen. The International Accounting Standards Board and the AICPA standards are very, very similar. So there's not a lot of difference that we're going to have to understand there. There is a pretty important difference between US GAAP and International Accounting Standards Board, IFRS. And that's something that we really will not get into in this class, okay? Your accounting standards are studied in your intermediate accounting, et cetera. But you can see I've talked about, and forgive me sometimes, guys, I'm a little bit CPA exam centric sometimes, since I've been teaching it for years. I call out the parts of the exam. The auditing exam will be the things that we'll be studying in this class. The FAR exam is what you would study in, say, your intermediate accounting, et cetera. Okay, all right, good. So let's just take a look in more detail now of the standards, okay? So you have the PCAOB standards. We know that PCAOB was created by the Sarbanes-Oxley Act. There's about 20 PCAOB standards, okay? And those are what? Over public companies, okay? Now, you have the Auditing Standards Board, and the Auditing Standards Board, as you saw on the previous slide, is a body within the American Institute of Certified Public Accountants, the AICPA. So the AICPA does a lot of things. If you're a member of the AICPA, my understanding, I'm not a member, but my understanding is that I could be on the CPA, I could be a member, but I'm not. But if you're a member of the AICPA, my understanding is you get some nice insurance that you could get through them, medical insurance, that kind of stuff. So they do a lot of things, but the part of the AICPA that sets the auditing standards for non-public company is called the Auditing Standards Board. So you're going to see us, you hear us talk about the ASB in here quite a bit. Okay, so they issue standards for non-public companies. Now, there's hundreds of ASB standards and only 20 for public companies. And you sit there and you say, well, how come? How come there's only 20 standards for public companies, John, and 100 standards for non-public, hundreds of standards for non-public companies? Well, that's because the PCAOB standards point to the Auditing Standards Board standards and say, look, for the most part, most of what you do will follow the Auditing Standards Board standards, but we're going to weigh in areas that we think are important for public companies. For example, auditors are to give an opinion on the internal control of the company. Whereas if you're looking at just the standards for non-public companies, no such a requirement. If you're auditing a non-public company, you don't have to give an opinion on internal control. Now you could, but that would be an attestation engagement, not an audit of the financial statements. When we're talking about PCAOB, PCAOB says you will audit and give an opinion on the internal control over a company. So difference there, big differences in internal control. Auditing Standards Board, most of the time we're auditing a public company, we're going to follow all of that, and then we're going to add some things on as the PCAOB calls that out for public companies. Okay, and then the International Auditing Standards Board would be over various countries. Our focus is going to be right in here. We could stop doing that. Going to be right in here because you know, there's not a whole lot of difference between the international standards and what would be covered, followed in other countries. Question on that? Again, I know that gets a little bit hard to follow sometimes. Okay, now I wrote these other abbreviations down here. I wrote AS is what that says, and SAS. Okay, so what happens? You have the Auditing Standards Board. They issue statements on auditing standards known as SASs. So what happens? They issue a standard chronologically, but then what the SASs do is they take those and they codify them by subject. So if we come out with a new SAS that deals with that goes a certain section of the standards, so that now as an auditor, you don't have to scramble through this chronological listing of when the new standard came out. You would go and look towards the reporting where they have codified all the standards regardless of when they came out chronologically by subject matter. If I say reporting in that example, PCAOB issues, that's an AS, looks like an A5, that's AS Auditing Standards. Again, chronologically they issue the auditing standards, but then they codify them by subject matter. So let's just go ahead and take a look here. Okay, you can see that you have your statement on auditing standard, your SASs. Okay, those are issued by the Auditing Standards Board. Guys, the textbook, I pulled this in from some other material. We have to be a little bit careful. The textbook sometimes forgets to put this C on here. The correct reference for the Auditing Standards Board when they put them into the section reference when they codify them is AUC, not AU. It's AUC, okay? C stands for clarify. So when they tried to get the standards to match the international standards, they came out with what they called the clarified standards, and that C was supposed to just be there for a short period of time, and they ended up just keeping the C. So when we refer to the standards, it's AUC. There is no AU anymore. It's just AU, And you can just remember, you see what I'm talking about? AUC, okay, so you have that C there, okay? That's the codification reference, okay? Those are issued by the Auditing Standards Board, the AICPA. They apply to non-issuers. PCAOB has the ASs, the auditing standards, okay? They are codified by AS section, topical reference there. This is issuers. Issuers, another way of saying public companies. But again, even if you're auditing a public company, you will follow the SASs, and then the PCAOB will add things on. Okay, you have generally accepted government auditing standards. Those are issued by my old office, the GAO, the Government Accountability Office. If you're auditing either a federal entity or an entity that receives money from the federal government. Let's see, can we think of any entities that receive money from the federal government? All the states. So if a state, when a state is being audited because of all the money they receive from the federal government, then the states get audited by the generally accepted government auditing standards. Okay, and sometimes they call it the yellow book.
I have a question.
Yeah.
Where does GASB fall in here?
GASB sets accounting standards. So if I was going to put them anywhere, Jennifer, I should have put them on the same slide where I had the FASB.
Oh, okay.
So the FASB, the GASB is they call it the sister agency. I call it the brother agency, whatever. The sister brother agency of the FASB. So they are literally in the same offices in Connecticut. So when I was on that assignment looking at the auditing standards, we were also looking at the accounting standards. So we went and met with the FASB, and then GASB's offices were right there. Okay, and that the accounting standards for state and local governments. So when you prepare financial statements for a state or a county or a city, you follow GASB. If you're preparing financial statements for a public company or a private company for that matter, you follow FASB.
Okay, thank you.
Yeah, and a government auditing standard, the Government Accounting Standards Board standards, the GASB standards are tested on the CPA exam as well. Sometimes, and it's on the financial section of the CPA exam, sometimes students don't think that's going to be a case, and there's about 10% of the financial exam or the CPA exam comes from GASB standards. So a state who receives federal financial assistance from the federal government, a county that receives federal financial assistance from the federal government, a city, all these entities receive gobs of money from the federal government. That's why I get a little annoyed when I see sometimes some of the discussion right now with the virus thing is, well, the red states don't want to be funding the blue states. Meanwhile, what happens? The money comes up from the states, the individuals living in the states pay their federal tax, that goes into the federal kitty, if you will, the federal pool, and then those monies are what? Often distributed back down to the states, and it turns out that the blue states pay more into the kitty than they end up taking out of the kitty. So it's just funny of these turn around and say, well, we don't want to be funding the blue states. I'm like, hello, the blue states are funding the red states already. So anyway, but as that money comes down to the state and local level, because that money comes down to the state and local level, the federal government says, hey, we've got the right to make you get audited, and you're going to get audited following the GAO standards. Also, because many not-for-profit entities receive federal financial assistance from the federal government, they are often audited following GAGAS, the Generally Accepted Government Auditing Standards. It's called a yellow book. I'm not going to bore you with me going through my bookcase over here and pulling out the little yellow book. The yellow book is fairly small, fairly thin document, although it has grown over the years, but it's a fairly thin document because it points to the auditing standards from the ASB. So the ASB really is the entity that's putting out most of the auditing standard than these other entities that have responsibilities over other levels, issuers, entities receiving federal financial assistance or federal agencies. They point back to the AICPA. So the AICPA, I kind of made it sound like they were, a dog that got slapped back back when Sarbanes-Oxley came back. They are actually the major player in the area of auditing standards. And then you have some other types of standards that follow that impact other areas. Code of professional conduct. Okay, this tells CPAs, you better be good. Okay, you better follow the proper professional conduct. For example, is it okay if I have a client that hasn't paid their bill? Can I hold their work papers hostage until they pay me? Their accounting records hostage until they pay me? I said, hey, I've billed you, you haven't paid me. I've got all your accounting records. I'm not giving them back to you until you pay me. Is that allowed? They owe me money. Can I keep their accounting records from them?
I would say no because they own them.
Yeah, they own them, and it would be unethical, right, for me to hold back those records. Now, you say, okay, John, well, how do we enforce that? Okay, well, what happens is each state has a code of conduct that, to a large extent, although they add additional things on state by state, but to a large extent follow the AICPA's code of professional conduct. So they have this model code that most of the states follow. So what happens? The states have the authority over CPA. When you get your license, sometimes students think that your license is given to you by the firm that you work for. The license is vested in you by the state, say the state of California. That license does not have the firm's name on it. It has your name on it, and it's signed by whoever the governor of the state is at that point in time. Okay, I forget who signed mine. I have it around here somewhere, probably Gymnasium or somebody like that signed mine. Never heard of them. Okay, governor way back. But that's from the state. So what happens is, because you get your license from the state board of accountancy will regulate what you do. So they put out the state requirements. It's in legislation, but they're the entity that then enforces the legislation that's in the state code, and that mirrors what the AICPA said you're supposed to do. So this is going to make sure that you're behaving ethically. This is going to be covered in Accounting 302. Okay, Accountant's Professional Ethics. Okay, you have to take this class. It is a 3-unit class that you must take in order to get your CPA in the state of California. So to sit for the exam, you have to have your 120 semester units with your bachelor's degree, 24 accounting, 24 business. You can sit for the exam. When you go for the additional 30 units, of which 6 are to be accounting, 14 are to be business, 10 ethics. The 10 ethics, 3 have to be from this class, Accounting 302, that covers issues that are specifically in the AICPA Code of Professional Conduct and other documents that are not as expansive as this, but also would be relevant. Okay. And then what we're going to study coming up pretty quickly here in this chapter is a statement on quality control standards. What this says is, we've had our SASs, our PCAOB. We know we have to follow those standards when we audit financial statements. But how are we going to structure our accounting firm to make sure that we follow standards? So we have what? We have the standards that say how we're supposed to do the audit, but we also have a set of standards for how we set up our CPA firm to make sure that we follow the standards as to how we're supposed to do the audit. Okay, so we're going to see that things like supervision and those sort of things are part of a good system of quality control. We're going to get to that here pretty quickly. I start talking about standards and accounting and auditing, and I lose track of time. So I'm showing around a little after 7. I'm thinking, guys, we need a quick little break, right? So why don't we go ahead and take about 10 minutes. We'll take a quick break, and then we'll start to pick up some more detail on the various standards that we've been seeing, sort of an overview at this point. Sound like a plan? Yeah? Okay, guys, we'll take a quick break. Okay. Okay, guys, I'm gonna go ahead and jump us back because I want to get through as much of this chapter 2 as reasonably possible. If you are there, can you raise your hand? I'm seeing a couple of empty seats. I'll make sure I'm not talking to an empty room here. So shit. Here.
Here,
Okay.
here. Yeah.
Thanks, guys. Okay, so let's go ahead and jump into well, pick up where we left off talking about the standards. Okay, so we have our general accepted auditing standards. Okay, and we have what we call statements on auditing standards. Now, these are interpretations of generally accepted auditing standards. So generally accepted auditing standards are high level, principle level. SASs give us the details to how we're going to implement those high level standards. Okay, so most of what we spend time with, I've circled, highlighted here, are the SASs. Again, as we've said, the PCAOB adopted SASs to a large extent when they were created. 2002 is when the legislation was passed that created them, but then it took a while for them to get going in 2003. And then, as we've stated, they have issued standards that go beyond SAS for public companies, and they issue those in something called auditing standards. Now, as they issue them, obviously they'll issue them chronologically over time, but what happens is they codify those new standards into, and again, we need to be a little bit careful with the textbook. They forget to put the C designation there, it's AUC, but the AU-C is how we codify the standards by topic, okay? So when you take a look, you can see here that, for example, SAS 39, which deals with audit sampling, which was issued a long time ago, right? There's now hundreds of standards. SAS 39 was issued a long time ago, but we don't expect somebody to go back and look way back and try to find where anything was said about sampling way back when in SAS 39. That would be located in the risk assessment response to assess risk section in the codification. Now, there's other SASs that would also be in that section that relate to risk assessment, okay? Anything relating to reports would be in AU section 700, et cetera. And so I'm going to give you some opportunity to practice a little bit with researching auditing standards. I don't think I'll grade you on that, but we'll do a little practice with seeing how you would research things. But when you research an auditing standard, you research it by AU section. You don't say SAS such and such, you say AU section, AU-C section such and such states X, Y, and Z as to what it is that the auditor is supposed to do. So even though they issued them chronologically by SAS number, they are codified by AUC section number. Okay. Now you come over and something similar could be said. That previous slide was blank. This slide, the same could be said about the PCAOB. So even though they issue them in auditing standards, they are codified in various sections by subject. Okay, so again, the chronological issuing would be, in that case, it's auditing standard 1, 2, 3. I think there's about 20 of them, but then they take those and codify them by subject. Okay, all right. So I think, I'm not sure if I picked these out of the homework or out of the quiz. Again, guys, do not freak out when you get into McGraw-Hill Connect and you see the homework and you see the quizzes. Sometimes, particularly some of my undergraduate students will freak out because they'll see that McGraw-Hill is not giving them the full points because they got one little word wrong or something. I'm not doing that. Homework, in my opinion, is a means to an end, not an end in itself. I don't give you a lot of points for homework, for quizzes, but I do want you to get in and take a look at those. They're good practice. And I'm going to do as many of these together as we can in class. And then these examples of homework and quiz questions will parlay into actual midterm questions. Most of your points in this class come from your midterms and the project I'm going to have you do. So don't freak out too much about you know, these homework and quiz questions, and I've embedded them where they're relevant in the slides as well. So let's just take a look at, just for practice here with this, see how we might be tested in this material. Which of the following could serve as a source of professional guidance in the audit of a public company? And notice option B here, yes, yes. Why? Well, if we're talking about a public entity, we know that the Public Company Accounting Oversight Board standards have to be followed when you're auditing a public company. But remember, we said that the PCAOB standards, there's only 20 of them. There's hundreds of SASs. They point to a large extent to the SASs, do all this. And then if we're talking about a public company, they're going to add on things such as making an auditor give an opinion on internal control. Okay, so I think you're starting to get a sense here. This is how we're going to go through. We're going to understand. We're going to have some examples. We're going to have the slides, and then we're going to see how that material might potentially be tested on your exams by inserting some example quiz / homework questions. Okay, stop me if there's a question on any of these as we go through them, guys. Okay. Which of the following is not true with respect to the responsibility for establishing generally accepted auditing standards? Now you can see the first one's the answer here. By the way, when you go into McGraw-Hill Connect, you won't have those friendly green arrows pointing to the right answer. There's some advantages to being the instructor. I get the green arrow, you don't. Okay, so when you look at some of these, when you look at these in your homework and your quizzes in McGraw-Hill Connect, you won't have them highlighted like this, and it certainly won't be the case on the exam. But let's start from the bottom. We can see that A is the right answer, but let's go ahead and start from the bottom. Which of the following is not true? Be careful with exam questions. They sneak that not word in there, and you're looking at what's true. You see the first one is, well, in this case, that wouldn't apply, but if they had put the first one as a true statement, you might select that and miss the problem because you didn't catch that word not. But anyway, starting from the bottom, if specific guidance is not provided by PCAOB auditing standards, auditors may refer to statement auditing standards that have not been amended or superseded. There is no requirement which following is not true. That's correct, right? If there's not specific guidance given in PCAOB, we look to the auditing standards because that's where most of the guidance is, right? Unless they've been amended or superseded by a PCAOB standard. The PCAOB is the body with formal authority for the creation of auditing standards for audits of public entities. That's true. And therefore, it's not the right answer. We're looking for the one that's not true. Interpretive publications are issued by the ICPA to provide guidance on the application of generally accepted auditing standards in specific circumstances. Yes, that's what they do. They issue interpretations that help us to follow whatever the standard requirement is. So the first one here is not true. Auditing standards for both public and private entities must be formally approved by the Securities Exchange Commission. Well, that's true for a public company, because remember, we had that slide where I pointed out that SEC has the authority has recognized the PCAOB as the entity that sets the auditing standards, and therefore they have approved what the PCAOB does. That does not apply to non-public companies. Okay, the AICPA still has the authority to set these standards for non-public companies, and they don't look to the Securities Exchange Commission for approval there. Now, having said that, the AICPA is not stupid. Okay, the AICPA is in many cases modeling what they see the PCAOB doing for non-public companies, because they don't want to get so far out of step with what PCAOB is expecting for public companies. And pretty soon, the PCAOB says, you know what, Auditing Standards Board of the ICPA, forget about you. We don't care about you. You're no longer relevant to public companies. And we're just going to issue our own standards that everybody has to follow for public companies. So to stay in that ballgame for public companies, the AICPA is going to pay attention what the PCAOB does, but they do not have to follow oversight of the Securities Exchange Commission. PCAOB does. Okay, question on that? I know that sometimes gives students some heartburn because it seems like who's in charge kind of thing. Non-public company, AICPA. Public company, Securities Exchange Commission, blesses the PCAOB. PCAOB issues the auditing standards for public companies. Okay. Okay, good. Let's go ahead and this one is, I don't know how you have yours set up. You can't see it, can you? Oh, I know why. Hello, because this is not the one that gives you the answers. So let's just see if we can work this on our own. I'm gonna have to move it on both computers so I can write in where I want to, because I don't know about you, but where I see you guys is blocking this slide to a certain extent. Okay, so you might need to move your panel of video. I don't know if you're seeing it the way I am or not. So let's just go ahead and take a look at these. And this, remember when I showed you the way your exam was going to look, I said you would have 20 multiple choice questions, 4 points each. That would constitute the 8 points. And then you would have 20 points that would come from more of an objective question like this. And you'd have to do a drop-down menu that answers the questions. When I show you the answer here in a second, you'll see how that works. You know what? I'm just going to put the answer up. I think it's going to be a little easier for us to see the whole slide if I do it that way. Can you see that okay? If not, you might have to move your window around a little bit. Okay, it's a little bit troublesome there. I did put it over this side there off the screen. Okay, so what would happen, even though there's 8 choices here, so 20 divided by 8, I'd give you partial credit, so you wouldn't have to get all 8 of these right to get the 20 points. 20 divided by 8 is how I would distribute the points here. But a question like this in total would be worth 20 points. Okay, having said all that, I'm not going to give you one like this that deals with the standards. It'll probably be more something that deals with our audit risk model and stuff that we'll learn in later chapters. That's probably going to be our 20-point question. Okay, but let's just look at this question, see if it helps us to learn something about the standards. Okay, conduct inspections of firms that audit public entities. Yeah, we said that, right? PCAOB not only issues the standards. Remember, the other major part of their responsibility was to have oversight, actually go in and look at the audits of public entities that have been done by CPA firms to see if, and they look at 2 things. Does the CPA firm have a quality control structure that allow it to conduct the audits correctly? And did they actually conduct audits? So they take a sample of audits and literally go through and see if those audits follow standards. Pronouncements may be used in the audit of public companies. That's what may is the key word there. May, in the case of the Auditing Standards Board standards, we say may because what? If a PCAOB standard has changed the requirement for a public company, then of course we follow the PCAOB standards. If not, then yes, then you do follow the AICPA's Auditing Standards Board standards. Pronouncements may be used in both, in the audit of public companies. PCAOB, you have to use it, and what? Auditing Standards Board, again, if the PCAOB does not address a specific requirement, then we look to the Auditing Standards Board standards. Was created by Sarbanes-Oxley Act, that's PCAOB. Involved with the certification and licensure of public accountants, and that's the state. That's the State Board of Accountancies. In California, it's the California Board of Accountancy, California State Board of Accountancy. Okay, so that is done at the state level. They're the ones that regulate, the CPA firms regulate CPAs, public accountants. Issue statements on auditing standards, that's the Auditing Standards Board. Conducts peer review of firms that audit non-public entities. What happens here? Obviously, it's not the PCAOB because we're talking about non-public companies, but to be able to audit a public company, you have to be registered with the PCAOB, and then you have to have had a peer review done. Okay, now what is a peer review? Peer review is where a CPA firm of similar size comes in and looks to see that the company, the CPA firm, has a quality control system in place and that their audits follow standard. Okay, and they call it peer review because if it's a big four firm, it's going to be another big four firm. If it's a regional firm, another regional firm. If it's a local firm, another local firm. Now, can you just hire your buddies, CPA firm to come in and do the peer review for your firm? No, they have to be registered, and they have to be registered with a qualified peer review program in almost all the states. I know California, because I don't know the, accountancy law for all 50 states, but in California, I do know that the state of California recognizes the AICPA's peer review standards. Okay, so the AICPA is the entity that issues standards for the peer review, and then peers, other CPA firms actually do the peer review, but they have to follow those standards and they have to be registered with the AICPA peer review program in order to qualify in the state to do the peer review of CPAs that are regulated in that particular state. So conducts the peer review, it's other CPA firms. It's not the PCAOB that's doing it, obviously, for non-public companies, and for non-public companies, it's not the Auditing Standards Board. It is the other CPA firms, the peer firms, the similar size firms.
I have a question about this one.
Yeah.
What is the benefit or incentive for these firms to do these peer reviews? Do they get paid?
The firms that actually conduct the peer review?
Yes.
Yeah, they get paid. Yeah, you got to pay them.
Who pays them?
The firm that's being peer reviewed.
Oh, okay.
Now, I know you look at that and you say, well, okay, that's a conflict, right? Because if I'm paying you, then maybe you're not going to be as stringent with me, right? But I have to be recognized by the AICPA as a peer reviewer. And so the AICPA is going to have some oversight as to these firms that get officially registered into their registry of peer review firms. So they can't get too crazy with it, right? But this idea of, well, wait a minute, you're paying the peer reviewer and they're doing the peer review, that feels like a conflict. Well, who hires the auditors? The auditors are hired by the company that they're auditing. So if you're feeling a little uncomfortable, good, you should feel a little uncomfortable, because this is not, a situation where we have the government coming in and doing these audits. It's all handled in the private sector, right? And so that's why we've seen over the years these problems that have come up. And what we do each time a problem comes up, we pass a new legislation to try to, remedy some of those problems. But guys, all of this whole society that you're looking at is a prayer, is a hope that we will follow the rules and will do the things that we're supposed to do. And it is not guaranteed that people are going to follow the rules and do the things that they're supposed to do. That's why it's important that we remain vigilant to see that these mechanisms and things that we put into place do the job. Otherwise, we're going to have some sort of totalitarian style government that's going to, force it on us. And because we don't want that, we have these private institutions that do these things. But by the same token, we need to stay vigilant as a society to make sure that those systems and whatnot are working. And that's I'm not running for office, so that's my speech for tonight on that. And then number 8, did I answer the question on that, though? I got into a little bit of speech making.
Yes. Thank you.
And then number 8, sanctions individual auditors for violations of generally accepted auditing standards. If you violate the standards, the sanction, again, who's has the responsibility over the CPA? It's the state. The state board of accountancy is the one that, if you're found to have violated a standard when you did an audit, so your peer reviewers find that, they're to report that to the state, but it's the state that then takes the action. So if you ever pick up the quarterly, you can get that right off of the State Board of Accountancy's website. They have a quarterly report, and in the back of the quarterly report, they talk about disciplinary actions. And sometimes reading through those is like, holy Toledo, you know, you hear some of the things that people did, and you're like, what were they thinking? You know, things like they issued audit reports, but they had no license. They issued audit reports, but their license had expired. These sorts of things. I mean, clear no-nos. Then there's sometimes you see it's just a mistake. You know, the person accepted an engagement that they didn't have the technical expertise to complete sufficiently. Now you look at that and you say, well, why should a person be sanctioned for something like that? You know, they thought they could complete the audit and they just couldn't complete it. Well, the state regulators have no sense of humor about that. That'd be like, well, you know, this guy took off a plane. He knew how to take the plane off, but he didn't know how to land it. Well, you know, we're not going to be too happy with that. So, you know, they can run into sanctions for not so much, you know, sinister reasons, but just incompetence. Okay. And so they'll do things like suspend the license. They'll do things like fine the person. In some cases, they'll revoke the license. And so there's different remedies that the state can come up with. Again, these are the kinds of things that are talked about in Accounting 302. But as a CPA, you are required every 6 years to go through what is called a regulatory course. And every 6 years, you would review the nature of the type of regulatory actions that the State Board of Accounting can take. You need to do that to renew your license. You renew your license every 2 years, but every 6 years, you have to go through a regulatory course. And so I have actually put together a regulatory course that is available to CPAs that are renewing their license. And that course has to be approved by the State Board of Accountancy. They look at the content of that course and say, okay, John, that's a good course. And then CPAs in the state of California can take that course to meet that regulatory requirement. So when you think about it, you get your education to be able to sit for the exam, you take the CPA exam, then you have to maintain your CPA by getting continued professional education. And they call out very specifically what some of that has to be, including that regulation class that looks at the nature of how sanctions are issued and that sort of thing. And when we prepare that class, we are required to give examples of different types of violations that have gotten CPAs in trouble over the years. So, okay, good. I was debating, I think maybe some of you saw me flipping through the slides earlier. I think what I want to do right now, guys, because I feel like we've got a lot of information. My sense from teaching over the years is there's the law of diminishing returns that starts to kick in when you have a lot of material. So what I'm going to do, I see some chats have come in, so maybe we've answered some of those, but let's look at some of the chats. And then I think what we're going to do is we're going to put this back into chapter 2 into next time. And then we'll go and knock out chapter 3 next time as well. Okay, just so that we're not piling too much information in right now. So, okay, those are more technical type questions. So let me throw it out there. Any questions about anything we've covered tonight dealing with sort of the broad overview of the CPA profession and the standards has been really what we've talked about thus far. No? Heard somebody clearing their throat or something? No? Okay, good. Why don't we stop there, guys? I think that's good. And so what we'll do next time, we'll start out right here for chapter 2. And I'm probably going to drive Gracie crazy with the way we're chopping things up. But this will be posted under chapter 1. And I forgot to figure out when we went over to chapter 2, but what she's going to do is edit where we start chapter 2, and she'll put that part under chapter 2, and then we'll have to do the same time the next time And I think we should get through all of chapter 3 next time, so that then we'll be having the lectures posted under each chapter slides. It is not my recommendation, even, it's not required, it's not even my recommendation that you rewatch the lectures. But let's say you were saying, you know, I didn't quite understand PCAOB does what, and the Audit Standards Board does what. Go back and take a look at that part. That's the way I think we should be using these recordings in this particular class. If you're watching this as part of the Accounting 111 class, then yeah, you probably want to watch the whole lecture. We'll be posting those up in the other class because some of the material is very, very similar. Any questions, guys? Concerns?
I have question about the homework and the quiz. So the homework 1 and quiz 1 is due by next week.
No. I recommend that you do it this next week, just to stay tethered to the course. Maybe you're looking at the homework for chapter 2, the quiz for chapter 2, digging in there. So those homework and quizzes are there to sort of keep you, again, tied to the course a little bit. But I'm not going to sit here, you know, and say, hey, you know, we didn't turn it in by such and such date. I'm not giving you the points. I want you to look at that stuff. I want you to use it as a means to an end, which is to help you learn the material and help you to do well on the exams and stuff. Okay. But if you look at the dates there, I think I put them out even after the course.
Yes,
is through.
after Sunday.
Yeah, because you know, I don't want to get into, you know, we're not children, right? I mean, you know how to be successful, and the keys to success here are coming to the lecture, listening, understanding, maybe watching a little bit of the lecture back where you had some concerns, and then applying those to those homework and quiz questions. And in some cases, I put the homework and quiz questions right in the slides, right? So that's the approach that we're taking here.
Thank you.
Mm-hmm. Anything else? All right, thanks for your questions, guys. Yeah, I really appreciated your questions and stuff, so keep them coming. It makes this a much more enjoyable thing for all of us, I think, if we have a dialogue. So keep that coming, and we'll see you next week, 5:30, and we'll get through the rest of this chapter 2 and chapter 3 next time, okay? Have a good night.
Thank you.
Thank you. Good night.
Thank you. Have a nice one. All right. Oops.